everybody. Welcome to the Trading Market Technicals morning call video for Wednesday, January 29th. Little bounce in the markets. Dow Jones up 90, Nasdaq up 14, S&P up almost 11, and the Russell up 10.5. Well, so where do we go from here? Well, we just have to keep in mind today is the last day of the FOMC meeting, Ben Bernanke's last meeting. So anything could happen. We can rally really hard here. And news will trump the charts. So the best thing to do is really step aside. If you are trading or if you do see a position, it would be best to get out of the position, flatten everything out until the FOMC comes. It's basically the wild, wild west after 2 o'clock. But we will get a risk event out of the way, and we could see how this markets will react. And what he says, obviously, is going to be critical. So let's just keep that in mind, and then we can start to adjust and readapt to what the markets are going to be telling us. So are we going to see higher prices, or if in fact we're going to roll over? Yesterday's little bit of a bounce is no excitement to me at all. There are some key sectors that I'm really looking at. I want to show them to you today. But there's the market in itself was not encouraging at all. We had very light volume. We were down, I guess, over 3% or so. Maybe more in the last 5 trading days, and we've only rallied 90 points in the Dow. That's not good at all. So this is something that we need to kind of still monitor. Not saying to go out and sell the markets, but I am going to show you where to sell them if the markets indeed starts to roll over. Okay. Now, yesterday I showed you the McClellan oscillator right here. It's a very trusty indicator. When to buy dips, when to sell rallies. This is a little bit longer term. I've showed you the bar chart momentum index, the BCMM. A little bit more of a daily McClellan oscillator. Sort of the same. It works the same. Gives good overbought, oversold readings. But you see here, we touched this area to the T, and now we bounce back up into the Bollinger Band. My guess, and again, it's just a guess. Because today is really, I would set aside any readings in the charts and see what happens for Thursday and Friday and going into next week, because we start a new month. We see if we get back up to this area here and then fail, and then that's where I would like to see. Like I prefer, if I'm looking to buy quality stocks where they sold off in sympathy with the market, I'd like to see reading something like here. Anywhere below 80 would be ideal for the McClellan oscillator to be looking to buy into, or of course above 80 looking to be selling rallies. Okay, so right up in here it's really in neutral territory, but again we did get a little bit oversold bounce, which is a good thing. So this actually could set up to be a good shorting opportunity. Now, the bullish percent SPX, just want to show you, we did get a little bit of, needs a lot of work though. So to me, it's going to be, I would say quite a while before the S&P starts to manage to get to new highs, unless something really happens and explodes higher. If it's just something that we're just going to be regular trading, then I would suspect this is going to take quite some time here. Okay, now it's all about the yen, right? We keep saying that. Well, we do have, you can see here the inversely correlated relationship with the SPX cash and the Japanese yen. Now we're actually above. So this is just did break bullish symmetry, which is not good for the markets. However, if we can maintain here and start to break lower, then I could see us having a bounce and maybe even testing the highs if that were to come. But right now the yen kind of quiet yesterday, and well, the yen is actually up this morning. So let's see what happens. We were actually up about 7-8 handles in the overnight session. That was basically initial pop in the after hours last night in our markets, and we kind of was stagnant all day, and then we just sold off, and now we're just up 50 cents. So again, not a good sign. A lot of these gains are not being held. They're being sold into. So this is interesting developments. Okay, so let's talk about the gold and silver trade, and then we'll talk about some crude oil here. I like gold and silver for a little bit higher prices if in fact gold can hold these areas. Now remember, it's not always something that just because we break this bearish symmetry and making bull flags. Obviously, gold and silver, precious metals, will be affected by what Ben Bernanke says. So if you're not in the trade, stay away. Wait for the risk event to end. If you are, you should be trading really small, because this should be a longer-term picture for for gold and silver. But gold holding up pretty well. Silver not doing too bad, but not as good as gold. As you can see here, it is creating a cleaner base than gold, but holding on the lower end of the trend line. I think if it breaks the lower end of the trend line, and if it doesn't come back up immediately the next day, then I think the trade would be over, or at least be a bust for the short term. If you are a longer term trader, then I would say that that trade still would be fine, but you still need to manage your risk and what you're looking to invest in the silver trade. But I do like this for at least one explosive move up, and then we would reevaluate the trade. Problem here is palladium is not helping the trade. We were up here, nice, managing up this area above the 20, and now palladium for the last 3 days have literally just dumped. Now, in the pre-market session, palladium is up $3.80. So, if it can stabilize back above these two areas of support, the 15 to 200-day moving average, and can stabilize a little bit and then start to move higher, then the trade will probably work out. But until then, I would stay away. I would not be touching the silver trade, especially today that we have FOMC meeting at 2 o'clock, the final day. Now, what's interesting here is crude oil. All right, now crude, which I showed you the bullish percent. Here is a perfect spot, 35 to 45%, to look for a move higher. Now, crude is down today, which is a gift. This morning, anyway, at least down about 42 cents to $97. So, if we can get a little pullback and make that higher low off of this low, and I'll show that to you in the cleaner chart. That's, to me, is something that I would be looking to start legging into a trade. Not just yet, but I want to see. I won't do anything until FOMC, but looking for some of the better trade prices in crude. But I want to see that lower high. I don't want to look to buy in this area here. I want to see a little bit of a lower high in USO, and then look to buy USO. Okay. All right. So now, what am I looking for in this retracement here? Well, the market clearly didn't do much of anything, as you can see here, right? And at the end of the day, we had this explosive move up. It came out of nowhere, right around 7 o'clock. Just literally popped up. We held all night, and then we just sold off here. As you can see, we're only up about 50 cents here, so not really a good thing. Well, what I'm going to do is I'm going to take Fibonacci retracement from the top-down approach to the lows, and I'm going to be looking for areas where I can short. Now, I can get a little bit more elaborate, but just for the video, I just want to show you what I'm looking for. To me, the first area comes into play is a 61.8% retracement. We have some nice areas here. We have another little cluster area here of price, and that's going to be an 1814, right? And that's the E-mini S&P. The other one, obviously, is the 50% retracement here, but we have the 200 period, which comes in at 1809. So anywhere in this area here, 1805 to 1814, if price can revert lower, right, and give us a sell signal, meaning a moving average crossover or whatever signal you use in your trading plan, I would be tempted and looking for a short opportunity in the markets. Okay, that's the area, 1814 to 1805, anywhere in between there. More of the 1809 to 1814. But let price break down, something like this, and let it break. Give us a reversal candle, take the previous reversal candle's low, and a moving average crossover, because by then we'll have that crossover to the upside. I will be looking to short, and that is the area I'm going to be watching in the coming days. Okay, now let's take a look at the other side of the 1 hour chart of the E-mini S&P, and here are these dotted lines, as you can see, are my support and of course resistance areas here. All right, and this is the old Fibonacci retracement, but I just leave it here just for reference. And as you can see here, we had very dismal volume here on the way up, low volume on an hourly chart, higher distribution days, not good. So to me, I think the markets are still in trouble and still vulnerable to the downside. Okay, now let's take a look at some of the sector charts, and then I want to go into, I got a couple of emails, some good emails, which I wanted to go over just to show how we're looking for some stocks here. All right, so the transports, inside day from the previous day, but at least managed to stabilize a little bit and still below the 50-day moving average. So it is going to need to break back above it today, and at least to alleviate some downside pressure on the daily chart. IWMs, same thing. It had an inside day from the previous day, so I don't see a lot of strength here. You can see that we sell off hard, and then we can't even get back the bearish engulfing candle. So this is not a good sign here, guys. So I think, again, aside from FOMC, if we can rally again in a low volume format into resistance of what I mentioned to you in the ES, that's going to be a good shorting opportunity. All right, Q, same thing. Now, Q's got a little beat up, but held up well because of Apple. Apple was down almost 50 at one point. Actually, it was down 50 at one point on their earnings, and it now is still below the 50. So it also has a lot of work to do. Okay. Now, spiders, same thing with the spiders. So you could see these indices that we follow are not too. There is no strength, so to speak. There's no strength in here. We have an inside day. Now today could alleviate that and change that for what Ben Bernanke says. I mean, he could clearly say, you know, non-farm payroll numbers were so dismal that we're going to stop tapering, and then we're going to add more liquidity to the market. I mean, he could say anything to explode this market. Right now he's still looking to taper another 10 billion. So that is probably in the cards. I don't think it's going to be any change, and I'm sure he's not going to disrupt the markets. So no change in Fed policy will probably keep the markets in tune about the same how it's doing now. So, and then they're going to then I would imagine market participants will start looking back to the emerging markets again and China. Okay, so diamonds, as you can see, same thing. So nothing really has changed here. We did get one little pop up to the upside. That's great. Individual stocks, again, it's a stock picker's market, and that's what I'm looking for. How to find stocks, and what are we looking at here? High stocks that are high quality stocks that are holding up relatively well, that are selling off in sympathy. That's what you want to buy. If you are a longer term. Obviously, if you're a day trader, you still want to look to those stocks for any type of support and any movement to the upside. Okay. If you're a longer term swing trader, that's what you want to be buying and adding to your portfolio. GLD. Now, GLD, we have this dotted slash line. That's the new trend line. It has to break this area. So the next pivotal high here is 122.92. It needs to take this out. If it does not take that out, then obviously we could easily revert back to the downside. So I like to see gold get taken out, and of course I like to see platinum start to move higher. Okay, XOP. Now, why XOP? Well, what is it? Well, it's an oil and gas exploration ETF, and how did I find that? And the reason why I'm bringing this up is I had a couple emails. Hello, Mark. You know, how do you find these stocks? How do you find, you know, how do you look for quality setups and ideas? Well, it's very simple. I have a list of ETFs, a bunch of them, and I scan every night and I look at what's setting up and what's not setting up, right? Stocks that I'm looking for. If I'm looking for strength, I'm looking for long ETFs that are looking to explode higher, like again the builders and the banks, like we had a couple of months back, and I've been touting in an email. So what I do is very simple, and I'm just going to show this here, and we teach this in our Trading Market Technicals site here. And what I'm doing is very simple. I take Yahoo Finance, I pop in the ETF, which would be the XOP, and it gives me the top 10 holdings. So I take the top-down approach of the top 10 holdings, and I look in all of the top 10 to see what is setting up. I dial it down from the ETF into the individual stocks. So for instance, if I'm looking for something like that, what I would be doing, and let me just get this out of the way. What I would be doing is I would be looking for, let's say for instance, let me get, here we go. Let me get a chart here, clean a chart. So SGY, Stone Energy. Well, I'm looking for some sort of a basing pattern. Why? Because the XOP is basing here, right? Now, it does need a little bit more work, but it's the point I'm trying to get across in the video is that I'm looking for setups, and I want to be a little bit early. So we're basing here, right? You can see this base. Let's see. Western Refineries, right? WNR. Okay, holding up pretty well, looking a little bit better, but it needs to break back above, let's say 40. So you get my point. You look for some of these stocks that are holding up relatively well, and look for them and write your notes, put in your log, and wait for the opportunity that the ETF starts to break out. When it starts to break out, obviously there's going to be relative strength in that sector. Now, also what I look for is obviously seasonal strength. I love to follow what kind of seasonal strength that the sector is doing. So, for instance, the oil and gas explorations, they actually do pretty well in during the cold months during February through May, as well as crude. Remember, so now crude oil does well, so does the oil services stocks, not just the exploration. So, and again, the ones I like is Schlumberger, Baker Hughes, and Halliburton. Those are the three. Halliburton being the last, Schlumberger being the best. I like the three, and that's via the XLE. As you can see, we're clearly in an uptrend. And all you do is you dial down to the ETF again and you take a look and see the best stocks. Now, this has broken below the bearish rising wedge, but again, holding up above the 200-day, which is the long-term uptrend. Okay, now, what obviously wouldn't be doing anything today, but that is something that you want to keep an eye on so you can find quality plays in your plan, in your trading plan. Okay, USO. Now, here we're back again talking about oil. I'd like to see a lower high, hold this 20, and then again start to revert back up again. Okay, now if we take this little cluster out and take the 200 out, this will alleviate any downside pressure, and now we are back headed higher. And remember, knowing that crude seasonality is coming into strength February through May, that is the time where you want to start looking at oil plays. And that's why, again, going to the exploration and gas and the oil services sector, the XOP, and of course the XLE. And you dial down and you just kind of follow them and you wait until you get your setup. But that was a great question. I got a good email about that. I wanted to specify on that. Okay, ITB, the home construction, and I keep saying, I've been saying it since December. I love the home builders and the banks for 2014. Well, it has exploded out of this downtrend, bullish bull flag, if you will, and now it's starting to break out and see higher. Now, again, one day doesn't make a trend, but if we can start to break up a little bit higher, it's going to take all the builders. The builders did well yesterday. Here's the XHB. Here's the home building ETF, the home builders itself, not home construction, because there's other varieties in that ETF. But again, you'll get a great clue. You'll get great clues when you dial into the ETF and look for individual stocks. Now, the XHB is still in a downtrend, but as you can see, it kind of woke up a little bit. And let's see if this can break out. All right, Lennar broke out of its downtrend. Another great idea that's saying, hey, the home builders could really start to move higher. PHM, this is one of my favorites, as I mentioned. I love the PHM here. It is ready to break out. And if you're looking to start accumulating, PHM would be one of them. KBH, same thing. Kind of woke up, it broke down the previous day, now broke back up again. And I would be waiting for a break above 1850, wait for the next back test. That higher low would be yellow. This low would be is the key and pivotal, and this is what I'd be watching. Below 1695 is your stop. The next lower high would be your entry. Higher low, excuse me, would be your entry, and then look for much higher prices to come in the home builders. Now, look at the XLF. Now, the XLF, a little different, right? We had a risk off, so the banks actually, especially with emerging markets, some of these banks have exposure. So now the XLF here is back testing this upper trend line from the 2012 lows. Now, if it could start bringing back up again, which it will, it's just a matter of time, I think the banks here would be a good opportunity to buy into weakness. Now, Citibank, same thing. Now, we're above the 200. We're barely holding. So this needs a little bit more work, but let's see if it could take out this gap area of resistance of $50, $50.10. If it could get back above it, it would also alleviate some downside pressure as well, and you could see at least a 50% retracement out of that. JP Morgan, same thing, coming into support here. Okay, so the banks again looking interesting on these pullbacks. Goldman Sachs holding above the 200. Again, one day doesn't make a trend, but if we can kind of base around here, the banks would be a good go-to. Even for day trade, guys, there's plenty of opportunity here. Again, the last couple of days obviously haven't been great for day trading. It's been kind of dismal, but if you can pick out some quality stocks, and you might have some good opportunity out there. Apple. Okay, Apple broke down 506, actually touched, I think 501, somewhere around there. And now this has a lot of work to do. And as you can see here, this broke this little area, this little flag area, and nice little bear flag broke down. So it's going to need a lot of work here before you get involved. All right, guys, hope this helps. Have a great day. Remember, FOMC at 2 o'clock. Be very careful. I will be stepping aside. Wait till the announcement comes and let the Cowboys do its thing, and let us pick up the pieces on the way out. All right? Have a great day. We'll talk to you tomorrow. Take care.